Good afternoon, everyone. Today is Monday, the 10th of October, 2011. We'll take a look at this market in a moment. Just want to remind you that on Mondays, this video is brought to you by Realtick. Realtick is the trading analysis and platform tool that I use for trading, and it's what's in these videos each day, and something I've been using for about the past 8 to 10 years or so, and I would say check them out if you're not using them. The market continues to just charge higher here. S&P was up 3.3% today. Financials were up 5%. We'll take a look at that once again in a moment. But we came back up to this prior important level. That is this, the prior lower high was 1956, and we can see that we broke above that today by 2 pennies. And so does that mean the downtrend is over? Well, not really, because we still have lower lows. We don't have a higher low yet, so we don't want to buy necessarily on this pullback. If you're looking to buy after a rally like the one we've seen from 108 to close to 120, I think you're maybe looking at it a little bit wrong. That is that we've gotten pretty extended here. The volume obviously very light. This is the lightest volume we've seen in several weeks, in fact, but still only price pays. And when we look at this market, a week and a half ago, we were talking about from failed moves come fast moves, and we saw that clearly on the daily chart. That we saw the breakdown of the August lows, and some people still insist that's a double bottom. I'm going to say it's not, but that's irrelevant really. But once we saw that market break down, it created enough fear and got rid of the supply, the weak supply that was holding, based on, hey, I'll put a stop underneath that August low. And then we had shorts coming into cover. And like we said last week, a lot of these rallies begin with just short covering, and it brings in sidelines cash. The question is, where are the sellers? Because again, a very light volume, there wasn't a lot of selling in this market. In fact, if we look at the 1 minute time frame, that is just today's action, we have the same thing. This afternoon we saw the S&P break below the volume weighted average price briefly, and still held above the daily at R2, but once it got back above that VWAP, this market just exploded. So once again, even on a very short-term basis, we saw from that failed breakdown here came this very fast explosive move higher of about $1 in the SPY. And again, from failed moves often come fast moves. We do still have a declining 50-day moving average, so I'm thinking that this market should run out of steam and begin to head back lower. But again, we have a pattern of higher highs and higher lows on this shorter term time frame. This is the level we were looking at over the weekend that we wanted to see hold, and it did in fact hold above there, obviously, because we had the gap higher today. And then it was a pretty low volatility session. We had that false breakdown, and then this fast move higher. So tomorrow we want to see, I think, 118 hold for now, and that's the bigger level that we want to see hold. Maybe you could say a little bit higher than that, 118 and a quarter, but 118, and then we'll be looking basically for a gap closure down towards about 117. You have to be impressed. Again, the market is extended short term. It's in a downtrend, but it's really done very little for the last 2 months. If you take a look at where it closed basically on August 8th versus where we are here on September 10th, we have 2 full months, and we're basically unchanged during that time, but just some massive swings. These moves have been just tremendous volatility, and definitely way out of the norm of what we would typically see. Month to date, the S&P 500 right now is up 5.6%, and we're only down 5% for the year. And still looking at a ugly looking weekly chart, but maybe we're starting to just turn a little bit more sideways. We've still got a lot of information to be given to us, and it looks like a lot more continued volatility ahead. So don't get too cocky about these, about your ability here on the long side just because we've had a nice rally. We've seen a few of these nice rallies, but they've all been very characteristic of bear market rallies. That is, we get explosive moves higher, but they quickly fail. Now, the top end of what the recent range has been, for the last couple months has been, up near 123.5. A bigger bigger level would probably be about 121.5, and those levels are now within reasonable distance. But again, is it reasonable to expect or to look for continued gains after such a large rally? You obviously don't want to sell it short too early, but some people I realize prefer that. But we do still have a pattern of higher highs and higher lows. Until that pattern is broken, I don't see an advantage of selling short for any type of mean reversion type trade that you might be interested in. The Nasdaq was up 3.4%, so obviously this market had a huge bounce from that $50 level, up more than 10% now. What is this, close to 12% just in the last 5 or 6 trading sessions. Still have that pattern of lower highs, but again, it's not necessarily going to just automatically turn into an uptrend if we get a higher high here. We want to see a pullback, maybe even as deep as 54 in the S&P, or I'm sorry, the Nasdaq this week, that could create that higher low. And again, we have to have an open mind. The market has been very resilient, volatile but resilient. Russell 2000, from its failed breakdown, and it's had a real fast move higher from the 60 level up to 68 now, so we're up 12 points off of those lows, or about, what is that, I guess 13%. And right at that declining 50-day moving average, or just below that declining 50-day moving average, also moving up on a notable decline in volume in here. So it's worth noting, and this becomes a potential level of resistance. But like we saw in the SPY, the 50-day moving average doesn't mean there's going to be sellers there. That's a potential area of supply, and rallies typically do fail, over the next few sessions when we have a declining 50-day moving average, and again, the Russell 2000 falling short of that level. But from that failed breakdown came a very fast and sharp move higher, and still in here showing, I've got some bad ticks in there, I don't know what that data is, but we did, of course, hold the important levels that we were looking for this market to hold. It seemed as though maybe we were going to get some consolidation, but the buyers keep showing up, and you simply can't fight it. It's just you're gonna go broke fighting the trends. But the downtrend line was broken. We had that shakeout here late in the day, and the explosive move higher in the Russell and all these markets. Semiconductors right at the convergence of that 20 and 50-day moving average, both of which are declining. And this market had broken down through an important level of support at 27 and a quarter-ish, and just a phenomenal move higher here the last 5 sessions, right up to the 20 and 50-day moving average. It doesn't mean that we will fail, but we had seen a lot of importance in August, basically between the 29.5 to 30 level. That level kind of got skewed, I guess you could say, because of that breakdown. But this was the bigger level of resistance prior at that 29.5 to 30 level that we were talking about, and we're getting back into that range. So I still think it's going to be a valid area where we should be potentially looking for this market to at least slow down. And remember, the markets correct price-wise or time-wise. So just a lot of people, I think, are looking to get short, and those early shorts, who are looking to short that first breakdown of VWAP, it's okay to do that looking for that mean reversion trade. But if you don't cover quickly, the losses can add up to be a big mistake here, and that's obviously something you don't want to see happen. So the semiconductors, maybe we pull back down towards that 28 level this week, 28 and 30 or so, but we're short term in an uptrend and have a very powerful uptrend as well, so you don't want to fight that. The financials did break that downtrend line from mid-August as well. Again, that doesn't mean that they're in an uptrend. We have a higher high, but we don't have a higher low as well. So it's not really the indication of a trend change so far. It's just a bounce within the downtrend. It's gone a little bit. It's gone beyond a trend line. And breaking a trend line doesn't mean the trend has changed. It means the downtrend has basically slowed down, and maybe we're going to get more of a correction through time rather than price going forward here. That is that maybe we're just going to start to turn sideways before we can begin to turn higher, get that 50-day moving average maybe straightened out, and the weekly charts, those they're still a mess. And these types of declines don't typically get turned around very easily. So that's just something to keep in mind here. Enjoy these rallies while they come, but then get very defensive and make sure you're not giving up those gains. The IYR was pretty volatile today as well, and it's still in a downtrend. This is the real estate index, of course, and we've still got the lower highs and lower lows in here. Late in the day, this is the one. This group kind of took a little bit of the lead on the way back up, or at least it seemed that way to me. But it held at that volume weighted average price, exploded higher here late in the day, and we might be breaking a trend line, or not breaking the trend line. I was actually looking at this one, and we broke that one last week and have this higher low. So we want to see basically $50 hold in the IYR, but some further or some pullback consolidation this week does seem reasonable and in fact likely. So that'll do it. Thanks for tuning in.